Let's talk about rates, baby. Let's talk about you and me. Let's talk about all the good rates that's coming for us to be. Next. So what are you saying, Troy? Are you saying that rates are going down? Are you saying that there could be a shift in the Fed's policy? I don't know. We're all going to explore that next here on Real Estate Daily. Welcome, everybody. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump in, hit that like button. I'm going to give you the best 5 to 10 minutes in real estate, even though it's December and nobody's out there thinking about real estate. I bet you right now it's kind of creeping back in everyone's minds because there's a lot going on, especially in the headlines. Now, let's jump right into it. Kobesi letter, and this is crazy news, I think. 3 weeks ago, 4 weeks ago, beginning of November, end of October, we talked about the chances, the odds of rate, decreases by the Fed was going to come somewhere at the end Q4, maybe Q3 of 2024. Now, the Fed had said way back in September, well, we don't see that we're actually even going. There's a possibility we're not even going to go just drop any rates in 2024. Now, everyone said, well, hey, the market is crashing. You cannot take the stock market and say that is the American economy. That's not. Every time there's a layoff, and we've seen layoffs after layoffs after layoffs happening. We saw Spotify just slash and cut. We've seen Amazon, Google. We just keep seeing more and more companies are slashing and cutting. What they do is they lower their expectations in their next quarterly report. And when they do that, they always hit those numbers. So they're like, oh man, we hit the number. And everyone's like, oh, excited. Well, you're looking at lower expected numbers. If you looked at 12 months ago and they actually planned out the entire 2023, these numbers are all off, completely off from what they were projected to be a year ago. But because we're only in the yay, hooray society, and we reward people that are not as, let's call it, truthful as they should be, well, guess what? All the stock market's doing well, but American society is doing absolutely shitty. Right? We're 62%, they said, of all income homes are living paycheck to paycheck. But you know what? No one wants to celebrate that. We all want to hear that the big blue team in Washington, D.C. say that, hey, Biden's economy is fantastic. Joey B's economy is fantastic. Guys, it's a shit show. And the reason why you can tell it's a shit show is that when rates start to fall, it's because people are losing their jobs. They're not spending money as much. The amount of demand on oil is going down because no one's driving because they don't have to go work. So you don't have to drive anywhere. No one wants to spend $4.55 here in Southern California per gallon to drive for 15 miles every $5. Doesn't make any sense. So let's go look at what Kobesi letter said. It says, and this is today's Kobesi letter, less than an hour ago, odds of rate cuts beginning as soon as January 2024 are rising quickly. Wow. So we talked 2 weeks ago, 2.5 weeks ago, that it looked like June. And then beginning of this week, they said, well, could be, it's a big little possibility at March of 2024. It's that Fed meeting that can begin it. Now look at the craziness. And I don't know if this is, overhyped BS or not, but it says now there's a 15% chance of rate cuts beginning next month. Wow. So we look at the charts here and you go January 31st. That's the January Fed meeting. Wow, 14.5%. This has come out of thin air. I mean, this has come out of, even Powell saying, well, we need to keep rates higher for longer, but we keep seeing the unemployment numbers climb. And we keep seeing everything's adjusting down, man. It is crazy. Everything, people unemployed, that adjusts up. People that are, the production in America keeps adjusting down and down and down. We just went over the third quarter, which was the worst quarter almost ever in American production. And then they turned around, don't tell anyone. The second quarter was revised from 2.8% rise to 2.3%. Wow, how can you keep being off so much? Doesn't make any sense. says the base case shows that 56% chance of rates cuts beginning in 2024 of March. That's crazy. Oh, it was only 3 weeks ago they said there was like a 5 or 10% chance. Now we're saying it's the majority of chance. So let's go look at this. March 20th, right there, 55%. And actually, if you were looking at this plus a 50% basis point rate, this is a 25% basis point raise right here, or decline, and this is a 50% basis point decline. Look at this. Add them together, we're looking at what? 67% right there. Let's call it 64%, 63%. Look at that. So it's almost 2/3 saying that yes, it's going to have a rate cut, and we can get down to at 5 basis points, or we get 4.75. Then we skip April, May 1st. Look at this, man. We are just, 10% chance they hold it, but you're looking at 90% chance of rate cut. And we keep seeing these rate cuts. Now, when you see it stacked like this, that means that there might be a chance that we're not going to have a rate cut. So we'll have a rate cut, and then we won't have one. Then we'll have a rate cut, then we'll have a rate cut, and then we'll have a rate cut. You get down here, they say 5 rate cuts. Well, there's 1, 2, 3, 4, 5. That's how you get your 5. These two are stacked upon each other. So they're saying, well, let's say in June 1st to May 1st to the 31st of July, that's when we're not going to have any rate cuts. But you know what? We're going to see the effect of the unemployment, the people that are getting unemployed and getting slashed. Now, I keep saying over and over, when you look at the unemployment numbers that are coming out, the majority of people being rehired from the government, that makes zero sense to me when they're as broke as broke can be. And so even if you keep printing paper, or you keep putting bonds out, doesn't make any sense, right? It makes no sense that more and more people, what does make sense, of course, is people having 2, 3, 4 jobs. That's what makes sense. All right. Markets are currently expecting a total of 25 basis points rate, and we'll go here. Rate cuts in 2024. Still, the Fed has yet to discuss the possibility of any rate cuts at all. Okay, markets are fully bought into the Fed pivot. Well, if the Fed isn't going to pivot, they are here to damage all of our lives. There is no ifs, ands, or buts. They are out to crush the entire economy. And I'm talking crush it. You're going to have, we already have 1.1 trillion in credit card debt. We'll have 1.4 trillion in credit card debt, and rising next year. We're going to see car repos go through the roof. We're going to see home foreclosures jump up. And guess what? All that foreclosure market will bring the housing market down a little bit. But I have a feeling that hedge funds are going to come in and buy up those homes and make you what? A renter. Yes, that's what. And on top of all that volatility, you have the volatility of the elections, volatility of, all the stuff on social media, everything going on, it's going to be madness. All right, let me jump to the next one. Our fun fact. This is a typical, and I can't believe Diana Olick isn't part of this. Let's go just double check it. No, I don't see it. How funny is this? The rise of sports betting, how it could affect housing. Come on, people. Really, you have nothing better to talk about? Blame everything on something else, but it's going to affect the housing market? This is just a joke. I thought it was funny. Let's get into real numbers. All right, so this is our interest rates. Now, I thought they would move up a little bit more, but we did see a slight fall in 30-year conforming. Nice little drop there in 15-year, which I think should be in the 5s at this moment. There's no real incentive between these two to jump from a 30 to 15-year. 30-year jumbo stayed at 0, and then the 30-year FHA went up 2 basis points, a lot less again than I thought. But guys, yesterday was at 4.29. Let's go take a look at right now. Look at this. Let me move this thing over. Can't see it. 4.167. It continues to drop down. We're seeing rates dropping down on a daily basis. Will we see rates go under 4 this year? I don't think so. It's going to all come down to the Fed on the 13th of next week. But what they say is happening, and what they're predicting or projecting for the 2024 If they say anything dovish, we have a chance of touching 4%. If they say anything neutral, I think we stay at the 4.10, even at right now 4.2, 4.1, and we'll just kind of hang there for the rest of the year. That's where the 10-year bond, guys. Again, the 10-year bond is connected a lot to the interest rates on housing, and that's where this has really come down. It's come down significantly. We touched 5%, and then we've headed straight down in a straight line, going just down, 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 down. We should see a little jump up, a little bump up, and then we should, I'm thinking if we're just charting TA, it looks like it's gonna, because we're under the 200, we're gonna go straight back down into the high threes, which would be pretty exciting for the first quarter of 2024. And I think the buyers will be back, and I think some sellers will be in the market as well. Well, guys, thank you very much for joining me today. I really appreciate it. If you have any comments, please leave them below. But hey, good news, rates continue to fall, and that helps not just only the housing market, that also helps the credit card industry, meaning that all these rates have some kind of tie into the Fed, and then obviously the bond market. And if we can get some relief with all this credit card debt and get some of those down, some of these interest rates down, it's going to help out. At this moment, projected that the U.S. government is the biggest expense for the U.S. government in 2024 is going to be interest. They're going to pay $1.1 trillion in interest. In comparison to the biggest expense that the government has every year is on defense and on armed forces, which is $867 billion. That's how effed up they continue to spend on garbage junk out there, that just all their agendas for the last 3 years, it's just really crushing us. So with that being said, a lot of the countries across the United States, across the world, do not want to use the US dollar anymore. Now, they just can't drop it. That isn't going to happen, but they can slowly start to trade in other currencies or other means, such as gold, their own currency. But what is the hottest shit going on right now? Cryptocurrency and Bitcoin. Now, Bitcoin, I don't think will ever be traded, but there's a lot of good cryptocurrencies out there, or digital assets that can be used as bridge assets that can instantly move money all over the world for any value to any value, any fiat to any fiat. I think that is the beginning of the end of the US dollar. So we'll see. That's something that might happen in 2024, but definitely by 2030. All right, guys, you guys all take care, and I will see you tomorrow.